If the S&P 500 performance is expected to struggle over the next 10 years, should you write it out or should you consider other options? What if I told you that when the S&P 500 performed under 4% on a 10-year basis per year, there was an investment that outperformed it 100% of the time? In today's video, we are going to be talking about what that alternative is and how you should think about your portfolio as long-term investors. Okay, so let's dig into this chart here. If you go back to 1986 to today, what we find comparing U.S. to international performance, the U.S. has outperformed international markets 60% of the time. Okay, so that's pretty good. That's better than a coin toss. The flip side of that is that means international markets has outperformed 40% of the time. So this is important to remember because the last 15 years have been great in U.S. markets relative to every other market, and we've forgotten that it doesn't always work this way. So 40% of the time, international outperforms. Well, we've talked about in several videos that based on its current price, which is high, U.S. markets may struggle, not because the companies are not great companies and doing great things, but because the price has gone up to the point where it's going to be difficult for earnings to keep up, for valuations of these U.S. companies to keep up. And we don't know the future, right? It's called the future. We don't know it. But if that were to happen and the S&P 500 were to not do great and perform less than 4% a year for the next 10 years, which has happened plenty, how do international markets fare? Well, in that scenario, if the S&P 500 returns under 4% per year for 10 years, which has happened plenty, international markets beat the S&P 500 100% of the time on a rolling 10-year basis for the last 40 or so years. Okay? Saying again, if the S&P underperforms or doesn't do great and returns less than 4%, which happens plenty, international markets in the past have beat it 100% of the time. Doesn't mean it's going to happen next year. Doesn't mean it's going to, be completely different in the future. But that's some pretty compelling data to consider if you don't think the S&P 500 is going to do great based on some of the research that we've talked about in my past videos. And so what does that mean? Does that mean I'm saying, hey, you should sell all your U.S. and buy all international? That's not what I'm saying. But you should take a look at your portfolio and say, what are the prices that I'm paying for my investments? Do I feel comfortable with how I'm allocated? Given this past research that we just discussed, do I want to make sure that I have my money diversified in a way that sets me up for a long-term success? Hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.